Hello everyone, good morning and welcome to Kalasilingam Academy of Research and Education. I am Dr. Ashok Kumar Sahu, working as an assistant professor in the Department of Commerce. So in this session, I am going to discuss you with the practical problems of memorandum trading account. So before we start this discussion, first we need to know the course outline of this session. This session gives an information about the various concepts in the preparation of memorandum trading account. It also gives an idea about the various formulas that are generally used in the preparation of memorandum trading account. It also clarifies the ideas relating to the preparation of memorandum trading account. It also explains the objectives of the memorandum trading account. So let's start. So here memorandum trading account is also known as special memorandum account. The objective of the preparation of memorandum trading account is to find out the value of estimated stock. Generally, memorandum trading account is prepared with the help of gross profit ratio of the last year data, opening stock, purchase, sale and direct expenses. How we calculate gross profit ratio? As we have discussed earlier in the video, gross profit divided by net sales into 100. So in the next slide we will discuss the steps, what are the various steps that are available for the preparation of memorandum trading account. So generally there are 5 steps to prepare memorandum trading account. So before we solve any kind of problem, first we need to prepare working notes. Without working notes, we cannot solve any problem. And we cannot solve any problem if we don't think ourselves as business. So before we start any kind of problem, first we need to think ourselves as business. That is very important. So there are 5 steps for the preparation of memorandum trading account. In the first step, for working notes, we need to prepare trading account by considering the available previous year data. So if there is 3-year data available, then we need to prepare 3-year trading account. If there is 2-year, then we need to prepare subject to availability of the data. So in the second step, we need to calculate the rate of gross profit. Here the rate of gross profit means gross profit ratio. After that, we need to calculate the closing stock. Then we need to calculate the closing stock on the date of fire. Then we need to calculate the net loss of stock, and in the last step we need to calculate the actual claim that to be lodged for the loss. So this is the practical problem of memorandum trading account. So as I have already told you, before we start any kind of problem, first we need to think ourselves as business. Okay, so here first we need to read the problem carefully. After that we can be able to solve the problem. So first carefully read the problem. So here it is written as a fire occurred in the premises of Chakravarti on 15th October 2016 and a considerable part of stock was destroyed. The stock salvage means whatever the amount of stocks you were able to save. So here the stock salvage was 22,000. It is already mentioned here. From the account books and other records that say the following information is available. So here it is last 3-year data given, that is 13, 14, 15, and the loss was occurred on 2016 year. So here opening stock already there, purchase less return 2 lakh in 2013, 2 lakh 90 in 2014, 3,26,000 in 2015 and 2,40,000 in 2016. Next, wages also given. Sales less return is also given 3 lakh in 2013, 4 lakh in 2014, again 4 lakh in 2015 and 3,20,000 in 2016. So closing stock is also given, that is in 2013 50,000, 2014 60,000 and 2015 also 60,000. Here we need to calculate the closing stock. Okay, here we need to calculate the closing stock for the year 2016 because the loss was occur on 2016. So here a fire insurance policy for rupees 80,000 was taken for the year 2016. So here rupees 80,000 is your insurance policy amount, okay, or insured value amount. Next, prepare a statement for submission to the insurance company in support of the claim for loss of stock. So here it is written as claim. We need to calculate what amount we should claim for our loss. Okay, so here the data is already available for 2013 year, 2014 year, 2015 year and 2016 year. So only we need to calculate the value of closing stock, okay, which is very important. So as to calculate the closing stock, first we need to prepare the working notes. Without working notes we cannot solve this problem. So how we can calculate the closing stock? For that purpose we need to calculate the gross profit first. So let's start. So here it is written how we can calculate gross profit. This is the solution. So here see, opening stock is already available. So here first we need to put opening stock for 2013 70,000, for 2014 50,000 and for 2015 60,000. So next we need to add purchases. Yes, purchases is also available because it already deducted from return. Then we can so here we can directly put the value. So here to purchase is 2 lakh in 2013, 2,90,000 in 2014, 3,26,000 in 2015. Likewise we need to add some wages because it's a direct expenses, so we need to put here. Next, sales less return, it will be recorded in the credit side of the trading account. Buyer sales 3 lakh, 4 lakh and 4 lakh in 2015. Next, yes, closing stock is also available. So here by closing stock 50,000, 60,000 for 2014 and 1 lakh for 2015. So here the gross profit means this is the balance figure. Okay, this is the balance figure. Gross profit means here this is the balance figure: 60,000, 1 lakh and 90,000. Okay, this is the balance figure. So for 2013 60,000, for 2014 1 lakh and for 2015 90,000. So after that we need to calculate the gross profit. Here gross profit is already here. Then for the year 2013 gross profit ratio will be 60,000 divided by sales. Here sales is written 3 lakh. So 60,000 divided by 3 lakh in 200, that is 20% for 2013. For 2014 same. For the year 2015 also we need to calculate the gross profit. We need to consider the gross profit and respective sales in the year multiply with 100. So this is in 20. So what we got now in 2013 we got 20%, for 2014 we got 25%, and for 2015 we got 22.5%. so here the average rate of profit is 20% plus 25% plus 22.5% divided by 3. This is the average rate of profit. How we will calculate average rate of profits? The number of years, number of percentage divided by number of year. So that is 22.5%. So in the next slides we will prepare the stock value. So here memorandum trading account for the from 1st January 2016 to 15th October 2016, because the loss was occurred on 15th October 2016. So that's why we need to prepare the memorandum trading account for up to 15th October 2016. So here to opening stock 1 lakh available, to purchases 2,40,000, this is also given in the problem. To wages 22,000. Next buy sales is also already given in the problem, that is 3,20,000, and closing stock is also given, that is no closing stock is not available. This is the balance figure. So how we will calculate this closing stock? We need to consider the previous year, like here in the previous working notes we have prepared the average rate of gross profit. So here we need to put the average gross profit, that is 22.5% of sales. So sales is available, that is 3,20,000. so 3,20,000 into 22.5%, that is 72,000. that is your gross profit. Okay, so this is the balance figure. Closing stock means this is the balance figure. Okay, so next we need to calculate the net loss of stock. So how we will calculate the net loss of stock? We need to here in first step we have closing stock, that is 1,14,000. So here the book value of stock was 1,40,000. Next we have to deduct the salvage value, because in the problem it is already mentioned that the salvage value was 22,000. So we need to deduct, that is 1,40,000 minus 22,000, that is 92,000. that is the amount of loss. Then third step we need to calculate the claim. So by using the formula, that is net loss of stock into policy value divided by value of stock on the date of fire. So here the net loss of stock is 92,000, multiply policy value is already given, that is 80,000 in the problem, 80,000 divided by value of stock on the date of fire. So here the closing stock value is 1,14,000. that is after using this formula we got the claim amount that is 64,561. So this is the claim amount that the company, the Chakravarti company, can claim for loss. So this is the solution of this problem. Okay, it is very easy problem. See, first we have calculated the working first we calculate the gross profit of the previous year data, then we calculate the calculated that what average rate of gross profit, then we prepare and the stock memorandum trading account as on the date of fire. Next we prepare or we calculate the net loss of stock, then we calculate the average clause by using this formula. So here the amount is 64,561. This is the claim amount. Okay, thank you so much.